If you're a first-time buyer or a wannabe first-time buyer, I want to talk to you about the single most important factor which will affect what rate of mortgage you can get. I'm Martin Lewis from MoneySavingExpert.com, and this is my quick briefing on LTVs. LTV stands for loan to value, and that is absolutely crucial. Now, yes, your creditworthiness affects what mortgage you can get, and yes, your affordability score affects it. But for the actual mortgage rate, it's all about LTV.
So today, what I'm going to do is I'm going to, with the help of Martin Lewis, explain LTV and add some additional information that will make you, the first-time buyer or someone who is going for a remortgage, it will make your life a lot easier. And I'll explain it in a practical way from the perspective of a mortgage broker who helps first-time buyers.
What is loan to value? Well, it's what portion of your home's current value, and house prices can change, are you borrowing? I'll make it very simple. You got a £10,000 deposit, you're buying a £100,000 house, therefore you're borrowing £90,000 on £100,000, you have a 90% LTV.
Now, obviously, this person is not buying in London, but it makes the numbers a lot easier when you talk about 100,000. Now, the first piece of advice that I would give you, if you're speaking to a mortgage broker and they ask you how much you have for a deposit, don't say a percentage, say a pound amount. Because in this illustration, we're talking about a £100,000 house. So 10% of 100,000 is £10,000. But if you're unable to find a house for 100,000 and it comes up to 110, then that means your deposit will need to be higher. And money doesn't fall out of the sky. So always let your broker know the pound amount of what you have and not just the percentage.
90% loan to value. Yes, I know you can talk about it in deposit terms, but that's not how the mortgage industry does it. It talks about it in LTV terms. Clearly, the lower your LTV, the smaller loan compared to your house price, the better the mortgage rate, down to about 60% LTV. Below that, it doesn't tend to get that much cheaper. Now, what actually happens in the market, and this varies all the time, so you need to go and play on a mortgage best buy comparison, and we've got one on MoneySavingExpert.com, and do different figures, is the mortgage rates can drop roughly every 5% of LTV. But there are some crucial thresholds where they may drop more. It does vary with time. So 95% down to 90%, 90%.
So when he talks about the 95 down to 90%, one of the lowest entry points for getting a mortgage will be a 5% deposit. So that's when you're working with the 95% LTV. I will say that there are some products on the market, and historically there have been some products that you can get 100% mortgage. So the bank will actually lend you the full amount. Those are few and far between, and you'll usually need perfect credit, UK passport, and a lot of other things that will make you an exceptional client. So I would say the 5% deposit is for people with better credit and more normal, or what we call vanilla circumstances.
Down to 80%, 80% down to 75%, and 75% down to 60% may well have even bigger gaps than the others. So why am I telling you this? What does this mean for you in practice? Well, let's do a simple worked example. Sound like I'm in school, but it'll help. So you are buying a house for £150,000 and you've saved up a 14 grand deposit. Well, that sounds pretty good. You've got your deposit in place. 14 grand is just over 9%. Because it isn't 10%, that means you don't have a 90% LTV. You have a 95% LTV.
That's an important point. Did you hear what he said? So if you don't go below that percentage to get to the next LTV price point, you're still trapped in the one above. And don't forget, quite often, and in most cases, when you are getting a mortgage, if that mortgage has a product fee, which can range from 0 to whatever, sometimes it's a percentage of the loan, quite often the mortgage broker will advise you to add that to the mortgage. The reason why they advise you of that is the product fee is non-refundable. That means once you pay it, if for any reason the mortgage does not go through, you don't get the money back. So if you're right on exactly the 10% or 5% and you add that product fee, it's going to bump you up into the next category. So he's going to explain a little bit of how you get around that, but I just wanted to bring that point out, that when you're thinking about speaking to your mortgage broker and you're looking for a house and you're looking at house prices, you understand this concept and why it's so important that you're giving them a pound amount and not just a percentage.
Yeah, you're way past 95, but you still only have a 95% LTV, which means you'll be getting a mortgage rate for people in the 95% LTV category. If you could push and find an extra £1,000 deposit and you get yourself to £15,000, now you're in the 90% category. Now these are made up and it will change over time, but for example, at a 95% LTV, let's say the mortgage rate is 5%, but at a 90% LTV, the mortgage rate is 4.5%, which on a £150,000 home would be a £40 to £50 a month difference in the amount that you're paying, £500 to £600 a year difference in the amount that you're paying. So just pushing
that is huge. And this is why the conversations with your broker are vital. I found in many instances when I'm dealing with a client, they'll come to me and say, I have X amount for my deposit. We'll work out the mortgage and maybe something else pops up and they're like, yeah, I have that money too. And I'm like, why didn't you tell me that in the first place? There was a possibility earlier in the early stages of the mortgage that maybe we would have gone in a different direction. We would have gone with a different lender because we knew with that extra £2,000 that you have, that seems to have fallen out of the sky, we would have been able to get you a better rate. So with this, I say always be open and honest with your broker. If you don't feel you can be open and honest with your broker, then you should not be working with him or her. We are here to help you. We are here to get you the best product that you can afford over the shortest term based on your lifestyle. If you don't tell us what you're looking to accomplish, if you're not honest with us about what your budget is, it's going to make it very difficult for us to find you the best product within your budget because we don't even actually truly know what your budget is.
That little bit more to get you to the next threshold can save you quite a lot of money on your mortgage repayments. Now, I'm going to get slightly more technical here, but there's just an extra tip on the end I want to add on. I've probably done enough already. But I'm saying go to the next threshold. Actually, what I've heard anecdotally from lots of mortgage brokers, who are always very helpful if you're going to get a mortgage, by the way, it's worth finding yourself a good mortgage broker to help talk you through it, as well as listening to this, is if you push £100 beyond the threshold, that can ease acceptance. It won't change your rate, but it can mean you're more likely to be accepted, because when mortgage underwriters, the people who are deciding whether you're going to get a mortgage or not, look at this, if you're exactly on the threshold, they're going, ooh, they're a little bit on the brink, they're probably pushing it a little bit much. But if you're just beyond the threshold, they look and go, oh yeah, that seems to work pretty well.
That's an important point. And this is Martin Lewis. This is someone who is a consumer advocate. He's advising people that they should speak to a broker. I'll explain one of the reasons why you should always speak to a broker. A mortgage broker is going to deal with lots of different lenders. Whereas if you go directly to your bank, they can only talk to you about their products. So they may give you the best rate that they have, but it doesn't mean that it's the best rate that you could get based on your circumstances. As a mortgage broker, I can essentially assess based on your circumstances, the type of passport you have, the amount that you have for your deposit, how old you are. I can work through the different lenders that would lend based on those circumstances and find you the best product. When you go directly to your bank, you only have one option. Whereas when you speak to a broker, we'll be able to go through 30, maybe even 40 different lenders and thousands of different deals. And we'll be able to put all of those in front of you and give you some guidance on it. So when he's talking about potentially putting in an extra £100 and it easing the underwriting pressures or making it more likely that you'll be able to get that mortgage, he is saying something from a consumer advocacy point of view. He's not a mortgage broker. If you know who Martin Lewis is, you know that he fights for consumers and is always trying to put the consumer in the driver's seat. So this is good advice, not just because he's saying you should speak to brokers like me, but because it is true. And as someone who has been in the industry for over 30 years doing finance, both in the US and the UK, This is great advice. And a lot of people feel that going to their bank is always going to give them the best deal. And in a lot of cases, that's not the truth.
We might just give them a mortgage. I hope this is useful to you. There's a lot more mortgage information, including a first-time buyer's full free mortgage booklet available on moneysavingexpert.com.
So that is Martin's overview on LTV. What I'm going to do now is I'm going to talk you through the mortgage process in less than 10 minutes. So first and foremost, what you want to do is approach a broker. Go and speak to a broker, and they'll do what's called an affordability assessment. This is where they'll understand what you're spending, what your credit rating looks like, what your visa status is, what kind of passport you have, all of the vital things that we as brokers need to know in order to find you the best deal. If you're working with me, from there, I'll produce an illustration. An illustration is essentially what a mortgage contract would look like if you pursued it based on the information that you've given me. If you're happy with that illustration, then I'll say, all right, well, you've told me these things. Now I need to validate it. So I'll ask you for evidence of what you've told me, proof of income, your proof of deposit, your ID, 3 months bank statements, 3 months pay slips, etc. From there, I will get your permission to do what's called an agreement in principle. Now, an agreement in principle is not a mortgage offer. An agreement in principle is not a mortgage offer. It's me going to the lender with the information that you've told me and saying, well, based on this information and you not validating it or seeing it, would you lend this client money? And they'll say yes. You'll get that agreement in principle. Most estate agents are going to require that in order for you to be able to make an offer. But the good thing about an agreement in principle, it gives you a solid idea of how much you can get from that lender. Once you have the agreement in principle and you've got an offer accepted, so you've gone to a seller and said, I want to pay X for your house, and they've said, yes, we're willing to sell it for that, that's when we would then need to do a full mortgage application. That's when we actually send those documents over to the lender that they can validate it. This is when they do what Martin was talking about. This is when they do the underwriting. This is when they do the credit check. So as part of my process, I ask you for your credit report in advance. That way we don't get any surprises. You'd be shocked how many people come to me thinking they have good credit, and actually their credit profile is not as good as they think it is. Or conversely, some people think that they may have some issues and they don't. Once the underwriting is underway, a valuation will be requested. Now, the valuation is mega super important. The valuation is not a survey. I'll say it again. The valuation is not a survey. The valuation is the lender assessing how much they think the property is worth. And what they think it's worth is the only thing that matters, because they're the ones lending you the money. Now, 3 things can happen when you get that valuation, and 2 of them are fine. 1 of them can be problematic. Thing number 1, they could say, well, you're buying the house for $400,000, but we think it's worth $420,000. That's great. That means it's come in over value. It can come in at value. So it can come in at the $400,000 that the seller has agreed to sell the property to you for. The thing that becomes problematic is if the bank says, well, we don't think that the property is worth what you are paying for it. So you've got an offer accepted for $400,000, but we think it's worth $390,000, $395,000. The reason why that becomes problematic is because that impacts the loan to valuation, because they will only lend based on what they think the product is worth. So if you were fortunate enough to be able to do a 5% deposit and then the property gets downvalued, it takes you above that 95% loan to value threshold. That might sound complicated, and when you speak to your broker, he'll explain that. Hopefully it will come in at value. So once the valuation is done, the full mortgage application has been completed, the underwriting has been completed, the bank will send out what's called a full mortgage offer. This is an actual offer. This means that they validated the information that you've given them. They validated the affordability. They've gone through everything. They're willing to offer you a mortgage. The mortgage offer is usually good for about 6 months. So it will have a date on it. The mortgage offer will be sent to your solicitor. And as a quick reminder, I say this in all my videos, do not cut corners on your solicitor. Get a solicitor who is quick, someone who you can speak to, especially if it's your first mortgage. Don't just go for the cheapest solicitor. We have several solicitors that we work with, and we'd be happy to refer them to you. Quite often, the estate agent will refer you to a solicitor, just like they will refer you to a broker. But we would recommend that you work with us and work with the solicitors that we recommend, simply because we have a relationship with them and we can help them help you get the deal through quicker. So the mortgage offer is in place. This is when the solicitors start to deal with each other. This is when you're kind of in a holding pattern because searches are being done and all of the legal things are being done. Remember, as well, as far as the deposit, you don't pay the deposit until almost before you get your keys. So that deposit, make sure you put it in a high interest savings account that maybe you can be getting, a couple of bucks in interest each month while you're waiting to pay out that deposit. So quickly, the first thing you're going to do is speak to a broker and do an affordability assessment. You're going to get agreement in principle. You'll go and do your property search, and then you'll find the property. You'll get an offer accepted. The broker will then do a full mortgage application, at which point evaluation will be done. Once the valuation and the underwriting is complete, you'll be able to then get a full mortgage offer. Once the mortgage offer is in place, the solicitors kick in, then you do exchange, and then you do completion. Getting a mortgage, especially if it's the first time, will require having the right information. Make sure you speak to a broker. If you need a broker, please, please, please reach out to me. I do a free mortgage affordability assessment report.